In the previous example, Bacall paid its suppliers immediately in cash. Its customers also paid in cash. In practice, suppliers often give companies some time to pay. The length of these payment terms varies greatly depending on the business sector or the size of the company, for example. It is as though the suppliers were financing the company's stock. This credit is a real source of finance for the business, as it does not have to pay out money. Imagine that Bacall pays for its purchases of goods for resale on credit. This means that they are not paid for immediately. The bank account therefore stays at €60,000, but the liability to the suppliers has to be recorded as the balancing entry. Similarly, companies often allow their customers to pay at a future date. The company sells its products, but it does not receive the payment immediately. In this case, the credit granted therefore counts as a use for the company. Imagine that the company's customers also pay for their purchases on credit. Let's analyze what happens when the company sells its stocks of goods purchased for resale. Firstly, a previous use disappears, the stock of €45,000. However, the proceeds of the sale do not go directly into the bank account. They are due from the company's customers and count as a new use of €45,000. Over to you now. Laurent invests €20,000 to purchase a vehicle to make his deliveries. He pays only half in cash at the time of purchase. Which accounts are affected by this transaction? The diagram for Bacall shows how the financial position of a business can be represented. Organized in date order, we list on one side the sources of finance that the company has on each date, and on the other side, the way that these sources of funds have been used on the same date. This is exactly what a balance sheet is.
So, from a financial point of view, we can define the balance sheet as a statement that shows, at a given date, on the right, a list of the sources of finance available to the business, and on the left, how the sources of finance have been used or applied.
Let's draw up Bacall's balance sheet. Although they are simple, the tables shown here are real balance sheets. There is no fundamental difference between these tables and the balance sheets prepared by real companies, with one notable exception: they are not presented in a standardized format.
The balance sheets shown here have been prepared in line with the financial transactions undertaken. In practice, however, rules covering content and form govern balance sheet presentation. We will study the standard presentation rules later.